Wall Street remains shut on account of Labor Day in the US. Stocks in the Asia-Pacific open lower ahead of the Australian Central Bank's rate decision, while the GIFT Nifty is indicating a lower start for the Indian market. Oil prices remain volatile. Brent holds near the $89 per barrel mark. Optimism over China's measures to boost its property market fades, even as the market assesses expectations of major producers extending output cuts. And addressing the G20 tech sprint, RBI Governor Shaktikanta Das hails UPI as a game changer in the digital finance ecosystem. Also says India is looking to expand the central bank digital currency pilot to more people and banks and expects them to play an important role in making cross-border payments more efficient. India experiences its driest August in more than 120 years as it grapples with 11% rain deficiency, with the east and northeast regions worst affected. Water levels in reservoirs also drops, while a JP Morgan report warns of more pressure on food prices if rains don't return in September. The Turkish President Erdogan, the negotiator behind the landmark Black Sea grain deal, meets Russian President Putin and claims that the pact could be revived soon. Putin says Russia is open to negotiations only hours after stating no deal will be signed until all of Kremlin's demands are met. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this morning. In terms of the global cues, there's not much coming through because, like I pointed out, the US was shut on account of a holiday, on account of Labor Day, so we don't have those cues. But for the Asian markets, most of them are trading lower. Actually, all of them are in the red right now after that solid session that we saw yesterday. So Hong Kong is leading the losses this morning. As you can see, it's a cut of over 1% coming through there. The Taiwanese index down around, 25 odd points, so not too much of a cut there. Barring Hong Kong, actually, it's not too much of a cut, but we're seeing between 0.2 to 0.4% coming through in terms of the Nikkei markets, trades, Shanghai, Kospi. So all of them trading a little bit under pressure. Let's also bring the GIFT Nifty up for you. It is indicating that after that 90-odd point kind of move that we saw yesterday, the open for our own markets could be around 20 points in the red right now. So that's what's happening in Asia. Like I told you, Wall Street, there was no action over there as the markets were shut, but the futures this morning are a little bit lower. So that is something that we are also tracking very closely. But let's move on and bring you the final update from our global market wrap this morning. European markets ended Monday's trading session lower. So the French CAC index was down around 17 points. The German DAX was down 15 points, as you can see. And the FTSE also closed around 0.2% in the red. Now, important cues coming through from the Eurozone region. Shares of the Danish drug maker Novo Nordisk hit a record high in intraday trade after a weight loss injection was introduced by the company. Just to alert our viewers, the company had briefly overtaken LVMH as Europe's most valuable listed company as well. So that's some interesting news for you as well. And investors now, in terms of the key data coming through, we'll look at the German inflation and Eurozone GDP numbers, which are both due later this week. So, of course, we're going to bring you up to speed as and when we do get all of those figures. But that's what we're tracking in terms of the global market action. Let's talk about all of the cues that you should watch as we get into a brand new trading session for our own markets, because yesterday was quite good. So let's see how things are looking this morning. We have Ekta, Mangalam and Surbi all here with the trade setup. Guys, a very good morning to all of you. Ekta, coming to you first. We did close above that 19.5 kind of mark yesterday, which is, of course, great. But tell us, how are things looking this morning?
Morning, Pavitra. Well, things are looking good. There's no complaints which is coming in right now in terms of what we are seeing for the market setup in the past couple of days. So the markets did extend Friday's gain. The sensex and the Nifty were at 1-month highs. The mid-cap outperformance continued, with the mid-cap index posting a record close in yesterday's trading session. The Nifty is above its 20 as well as its 50-day moving averages. Now, in terms of the global cues, the US markets were closed for Labor Day. Europe is largely sluggish. Asia is largely sluggish at this point in time. Just keep your eye out on Brent crude because that continues to be a concern on the sidelines for our markets. For the GIFT Nifty, it is indicating a little bit of a soft start. Now, in terms of the other cues to watch out for, the larger picture is that watch for the sector as well as stock-specific action. For example, yesterday we had a lot of traction in railways as well as sugar stocks. We had stocks such as Bharat Forge, BHEL, which were at the fresh yearly highs. We had traction coming into a couple of these metal counters. So there is a lot of stock-specific, sector-specific buying action that we are seeing in our markets. Also, Just watch out for the flow picture, because while the DIIs bought quite handsomely in yesterday's trading session, there was quite a large sell figure which came in from the FIIs. But despite that, we did have the markets which were at 1-month highs. In terms of the Qs, the G20 meet kicks off on the 9th and 10th of September. So that's the near-term Q. We've already discussed that we do have the CPI data as well as the US Fed meet over the next couple of weeks, which would be important factors to watch for.
All right, Ekta, thanks a lot for taking us through all of those cues. Let's also talk about all of the stocks that you should watch in today's trading session. And Surbhi is here with that entire list. Surbhi, what do you have on your radar today?
So the first one on my radar is Hero Motor. The company is going to invest up to 550 crores in Ather Energy's right issue. The next is Cipla. The company's South African arm acquires Actor Holdings for $49 million. Mahindra & Mahindra Financial Services is also on my radar. They've come up with their August monthly update. The disbursements are up 15% on a year-on-year basis, and the collection efficiency remains unchanged at 96%. Escorts Kubota. The company is going to raise prices of its tractors effective September 16th. IEX also has released their monthly business update, and for the month of August, the total electricity volumes were up 21% and the market clearing prices were up 33%. And lastly, Bombay Dyeing. The company has settled a dispute with Axis Bank over disputed land for 149 crores.
All right, Surbhi, thanks a lot for that entire list of stocks. We're going to watch for all of these in today's trading session. Finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Mangalam, what are you tracking?
Well, it's a good day. It looks like a good day, despite the GIFT Nifty implying a 20-point downtick. The reason why I say this is because over the last few trading sessions, the dips have been bought. And yesterday, the Nifty went ahead and conquered that 19,500 mark. What was also good is that the Nifty bank was underperforming for most part of the day, only came back in the latter half. The IT index in the second half took on the mantle of taking the Nifty higher. And if you just take a look at both the Nifty as well as the Nifty IT index, you will know that it was a big contributor in Nifty's resurgence from the lows itself. Both those lines extremely congruent with each other. However, what was confounding was the institutional cash flows, because the FIIs sold about 3,368 odd crores, the DIIs bought 2,500 crores, and all of this without being any major block deal or something. So this is something that we just need to keep an eye out on. In index futures, there was both long unwinding and a little more short unwinding that led to the FIIs buy about 150 odd crores in index futures, and their longs inched mildly higher from 51% to 52 odd percent itself. The important part, they're looking to play this upside via buying calls. So they bought nearly 4 times the calls of puts that they bought. 2 lakh calls bought versus about 50,000 puts bought. And at the same time, on the way up, there may be some congestion is what the play is, because they've seen about 1.5 lakh calls being written, and at the same time 0.62 lakh puts being written as well. Where were these options active? 19,500 on the Nifty, telling you that 19,450 is an important support. That's the 19,500 put. And on the way up, 19,600 call has been extremely active. Premium of 35 rupees, telling you levels upwards of 19,650 may face some bit of congestion. The 19,450 mark is an important support technically as well, because we have both the 20 and the 50-day moving average out there. The Fin Nifty expiry plays out today. It is a Tuesday. So out there we have 19,850 and 19,750 options most active. And the Nifty bank on the way up might face some resistance at 44,800. The only thing I'm watching out for, this mid-cap outperformance has also led to a lot of stocks going into F&O ban. So we have Balrampur Chini, BHEL, Hind Copper, India Cements, all of them entering F&O ban, and this is just day 3 of the series.
All right, Mangalam, thanks a lot for getting us all of those cues. That's how things are looking on the future side. But with that, it is time for our first break on the show. On the other side, we're going to track all of the cues from the commodity markets. There's a lot going on in terms of the crude move, the metal move, so stay tuned for all of those details. Welcome back. You're still tuned into Power Breakfast. Let's talk all about the commodity markets now. Manisha joins us with that update. Manisha, we were just going through the equity market setup, and one of the key cues is that the commodity space is buzzing, whether it's crude, whether it's metals. So tell us what's going on there.
Oh, well, absolutely. Many of the metal prices are trading firm as China demand has improved, and China is expected to take further action to support real estate, and that clearly has been supportive for the metal prices. But the crude also has been trending higher. We are trading at a 7-month highs, not too far away from $90 a barrel. We've seen the crude oil prices gain up by 7% in the previous 1 week, and this is ahead of the OPEC meeting, which is happening this week itself, where the street anticipates that Saudi Arabia and Russia will extend its cuts into October. And the markets also are looking at the recent China stimulus measures. That also adds to the prices. But until the fact that you get better economic data from other importers like Japan, where we've seen householding spending decline, there are higher exports from Iran and Nigeria. This is what is keeping prices in check. But having said that, if you look at the last couple of months, we've gained up by nearly 20% for the crude oil prices. And if it crosses 90 on the higher side, markets are expecting further gains then.
All right, already just below 89 right now. Manisha, thanks a lot for getting us all of those details. But with that, let's also move on and bring you some important news coming in on the global front. Russian President Putin and Turkish President Erdogan met in the Russian city of Sochi yesterday in an effort to restore the landmark Black Sea grain deal. Remember, Russia quit the deal in July, a year after the United Nations and Turkey brokered the deal, and objecting to the issues Moscow's own food and fertilizer exports faced. Now, while the Turkish president struck a hopeful note in the revival of the grain deal, Putin said that Russia would be open to negotiations as long as the West meets its demands. Listen in.
We will be ready to consider the possibility of reanimating the grain deal. I once again told the President about this today, and we will do this as soon as all the agreements on lifting restrictions on the export of Russian agricultural products, which are recorded in it, are fully implemented.
Right, that's where things stand on that global story. We're going to keep tracking this and bring you all of the important details on that front as well. But with that, let's talk about the monsoon, which has been extremely deficient this year. Like we've been pointing out, India has experienced its driest August in the last 122 years. And a recent report by JP Morgan warns that the absence of a near normal monsoon in September could bring food prices under pressure. So Sandhya is here with all of the details from this report. Sandhya.
India witnessed the driest August in the last 122 years with a rainfall deficit of 36%. This has affected key kharif crops like soyabean, cotton, maize, pulses, coffee, groundnuts, coriander and other fruits and vegetables. On the other hand, flooding in states like Punjab and Haryana has affected paddy. Delayed monsoon and subsequent uneven rainfall affected sowing area under pulses, and it dropped by around 9% as compared to last year. For paddy, the sowing area increased by around 4%, but experts say this is because of re-sowing in states like Punjab and Haryana. Experts say that floods continued even after re-sowing. That's why this increased sowing area won't help with the overall rice production. In 2022-23, rice production witnessed a drop of 6% at 104 million tons as compared to 2021-2022. Now all hopes are pinned on September. Though farmers of Central India, Western India and South Peninsula claim that it's too late now. The flowering window for most of these crops is closed, and even if it rains in September, it won't make a huge difference. But the experts believe that if September witnesses a decent rainfall, it can revive the kharif crops. IMD forecast says monthly rainfall for September over the country as a whole is most likely to be normal. But for states like Punjab, Haryana, Rajasthan, Gujarat, Maharashtra, Kerala and parts of Andhra Pradesh, Telangana and Karnataka, there is up to 40% chance of below normal rainfall in September. A dry August affects kharif crops, but dry August and dry September affect both kharif and rabi crops. Rabi crops depend on stored water, and dry August and dry September affect key rabi crops like rice, pulses, maize, potatoes, cumin and other fruits and vegetables. Indian government data suggests that on 31st August, live water storage available in 150 reservoirs across India was 23% less than last year and 9% less than the average of last 10 years. The overall production of both Kharif and Rabi depend on September's rainfall, which will ultimately decide the food inflation rate in the coming months. A recent JP Morgan report states that as of now, price pressures are likely to remain contained and not broaden out. But if September doesn't witness a near normal rainfall, food pressures could increase and affect the inflation forecast.
All right, Sandhya, thanks a lot for bringing us all of those details. So all eyes really now on how the monsoon shapes up in this month, that is in September, after that 11% deficiency across India for the month of August. With that, we are going to get into a short break. But when we return, chief execs of Nifty companies saw total remuneration slip 25% on average last year. We're going to bring you all of the details once we come back. Welcome back. Let's also get you some important developments now on the national front. 7 assembly constituencies across 6 states will hold by-polls today. And this includes elections in Tripura, where 2 constituencies will go to polls. Now, remember, these elections will be the first test of strength for the recently formed opposition bloc India. The group has also resolved to fight the upcoming polls against the BJP-led NDA. So that is some important news coming in on the political front. Of course, key to track today. But with that, let's move on to a very interesting piece now. The CEOs of India's top 50 listed companies, that is the Nifty companies, saw their remuneration decline by around 25% in the last financial year. That's not all. Not a single CEO from this pack has managed to break the 100 crore mark. There were some interesting trends as well in the IT sector, where CEOs of mid-tier companies took home larger checks compared to their peers to run top-tier companies. So Yusuf K reports on all of the key salary trends that we've seen across India Inc.
For corporate India, FY23 was not a great year when compared to FY22, especially because performance in FY22 was exceptional, with the world rebounding from the COVID-19 pandemic. This is reflecting in the salary checks of India's top CEOs. The combined remuneration of CEOs of companies making up the Nifty 50 in FY23 stood at just over 1,000 crore rupees. This was 425 crore rupees less than the FY22 figure. Even accounting for a net reduction of 70 crores due to changes to the Nifty 50 constituency, this is a sizable drop. Total remuneration includes fixed pay, variable pay, retirement benefits, and the prerequisite value of stock options exercised during the period. Average salaries dropped by about 25% to just over 21 crore rupees, against figures topping 28 crore rupees in FY22. Interestingly, none of the corner office executives took home a 10-digit package. FY23 had 3 people drawing salaries above 100 crores. Sajjan Jindal of JSW Group, Vijay Kumar of HCL Tech, and Murli KDV of Divis Lab. Pawan Munjal of Hero Motor came the closest this year with a remuneration of 99 crores, followed by Wipro's Thierry Delaporte. For Indian IT, small was big in FY23. Sandeep Kalra of Persistent and Nitin Rakesh of Emphasis took home larger paychecks compared to their peers in big-ticket IT firms. The remuneration of these two was just below that of Wipro's Thierry Delaporte, but above that of Infosys chief Salil Parekh. The remuneration of Sudhir Singh of Coforge was more than that of Tech Mahindra's CP Gurnani, TCS's Rajesh Gopinathan, and HCL Tech's Vijay Kumar. So barring TCS and Wipro, all IT companies in the Nifty pack saw CEO remuneration decline in FY23. In Mumbai with Yusuf K, this is Matthew Thomas.
All right, that's a very interesting piece on how the salary trends looked across India Inc. But with that, we're going to wind down on this edition of Power Breakfast with the news that all Asian markets are in the red. Not too much of a cut, but trading with cuts right now. The GIFT Nifty also implies a lower start for our own markets. Thanks for tuning in. We have Bazaar Morning Call after this short break.